I'm your host Chetan. In this episode, we'll explore the main regulation and compliance issues that bank needs to navigate in the transaction banking space. For banks and treasurers starting out on their transformation journey, what key pieces of advice or insights would you offer?
Well, I think the most important learning for me as a professional in this area is you've got to have a vision of what you want to accomplish. And I don't mean it as a throwaway statement. I think programs are complex, they are sometimes very large, and they are quite discrete in terms of what they do. So you kind of split these programs into smaller components that are easier to manage. And so one of the dangers you have when you have multiple components is the vision of how they all have to work together. I think in theory, there is always a thought process there, but in actual, I find that quite often that connectivity is lost. And one of the things that happened as a personal experience is during COVID era. When COVID hit and pretty much business as we know it stopped, everything became digital immediately. We found in the company I was working at that time at JP Morgan that we had a huge number of digital capabilities, like any leading bank in this area. Yeah. But one of the learnings is that these capabilities had been built at slightly different points in time. They didn't necessarily have an overarching philosophy to connect. And so while we had all these digital assets, they seemed in some way less than adequate in a situation like COVID, where everything had to be digitized and connected seamlessly. So that's a great learning. And so the important thing in my mind is having that overall vision and strategy to execute that in a more integrated fashion, even though these pieces may be developed over periods of time. One of the other learnings over the many years that I've been in this business is programs are funded for primarily two reasons. Either there is a business opportunity, so it's a revenue opportunity, and therefore you create a product and you assume or you hope that it'll sell and you can monetize it. The other reason why programs are created is because it can drive down costs, and technology is a great enabler to do that. And these are very, very good reasons, very tangible reasons why you would fund programs. But I think in my mind, at least, one of the key reasons we need to invest and build programs is basically to improve client satisfaction. What drives your revenue or drives your cost down is not necessarily the same as how do we make it much more applicable to the customer, ease of doing business, etc. And so as you think about programs, especially technology or transformation programs, think about what value you're creating for clients. And in my mind, customer satisfaction and making sure the customer has the best possible solution in an integrated fashion is really a true delivery of technology in this domain.
Vivek, I'd love to hear your thoughts on this as well. What essential advice or insights would you give to the banks, treasurers, and tech companies as they start their transformation journey?
So I've seen this from both sides. So I really feel passionately about it. And there are definitely learnings which I'd like to share. And when I say both sides as a banker, I did help hundreds of corporates literally in their treasury transformation journeys. And those also can be quite complex, especially for multinational clients across multiple geographies, currencies, entities, so on and so forth. And then as a banker, as a technology provider now, helping banks in their own technology transformation or technology upgrade programs. So I have a few learnings. Sridhar mentioned all of these programs. I'm talking about the larger ones, are quite complex. They're very challenging and they're multi-year. So if you keep that in context, and one of my banker friends, he was sharing, and he's the president of the wholesale bank for that bank. He was sharing about their experience of implementing a technology program with another vendor. And he was said, Vivek, it's like extracting a tooth or like a root canal. So that's how painful it can be. So first thing, exactly what Sridhar mentioned. It has to be driven from the top, so there has to be a clear vision. It has to align with your business priorities. It has to be something on the CEO's scorecard, delivery of that program, and something that the board is going to be looking at. And I'm talking of really large technology transformation programs. That's because along the way, there are going to be challenges, there are going to be speed breakers, there are going to be roadblocks which will come in, and those need to be navigated. And without that kind of sponsorship, they are not going to go through. Second, I think it's related to the first point, but it's in terms of commitment. Because it's a multi-year program, you need to make sure there's enough commitment in terms of time and resources to last you. Very importantly, to have dedicated resources. You cannot have people who are running their day job and side of the desk managing or running a program or being part of the program. You cannot have that. Again, like I said, multi-year programs require significant amount of focus. And related to the second point is also it's an ecosystem play, which Sridhar mentioned. So it's not just my technology as a software technology partner which is being embedded. It's integrating with various other elements of the bank's ecosystem. It could be with the core banking, it could be with the treasury management software, it could be the the servers they have, what's the capacity, what's the kind of security protocol they have, and so on and so forth. So all of these need to be working in sync. So when you are implementing a technology transformation program, make sure the bank, if as a technology provider I'm saying, make sure the bank is aligning all the other ecosystem players and giving them some kind of a place where they can meet and resolve these kind of issues. Third one, need to have very clearly a strategic partner as your technology provider. And I keep saying this to my clients, please treat me as a strategic partner, not as a service provider. Because the moment you make that shift, the entire organization looks at you very differently. They are able to look at you in a more long-term way. They're able to share their challenges and they include you as part of the team. And that for me builds it in. Fourth is perhaps the most important point. Don't kid yourself. This is not a technology transformation program. It's a change management program. It requires huge amount of change management. It requires change in mindset because people will always go back to the old system and say how well it worked with clients. Even clients will come back to you, and your largest clients in India, Reliance, will come back to you and say, oh, I prefer the older interface. Though what you're giving them is a much better, much more refined because they're used to it. So change management, you need to have the commitment. Employ all the tools that you have at your disposal and knowledge in terms of change management tools, tricks, techniques, whatever. Related to that, of course, is stakeholder buy-in. Buy it in early, get their buy-in. It's not just about driving it from the top. You need to have stakeholders who really believe in the program and who are wedded to that program, whose scorecards are tied to that program also. Sixth point I would say is define clear metrics for success. And 7 point tied to that would be a very, very robust governance process. Governance process will include weekly meetings, tier comms, etc., but also escalation and problem solving method. So these are what I would suggest. From my experience in the last few years, programs have become so complex, exactly the point Sridhar was making. You also need to do one thing very, very clearly and openly at the outset, which is to box the scope. Because a program which takes 3 years, you can imagine user requirements have changed, customers have changed, and they would want to keep on adding to the scope. And that for me is the biggest risk to running any kind of a technology transformation program. So you need to have a clear understanding with the bank, with the technology providers. Scope is boxed. We can add, of course. You need to be agile, but you can't be so agile that you can have so much scope increase, because that is the biggest pitfall for any technology transfer program or technology transformation program successfully being deployed.
Sridhar, given the regulatory and compliance requirements are paramount for banks, can you discuss the main regulations and compliance issues they need to navigate in the transaction banking space?
Sure. All financial institutions typically are governed by prudential regulations. These are at the top of the house for an institution. They're not specific to transaction banking, for example, but they impact how transaction banking services are delivered. And then you have a number of other regulatory compliance needs associated with it. While these are external and bank-wide with typically the regulator in that jurisdiction, you also have policies, procedures of your bank itself that also impact their ability and the way you deliver the transaction banking products. Now, what are some of these regulations? You've all heard of Basel regulations. They effectively have a way of determining how you run the bank, ratios associated with it, how you manage your liquidity. So you have liquidity rules specifically in many marketplaces. You have sanction screening regulations. You have AML regulations. And so trade AML regulations. And so there's a number of regulations depending on the nature of the products that you service or you offer to clients. These are regulations that you need to meet. Then you have a number of softer requirements. These are not regulations cast in stone, but they're particularly important. For example, to adhere to things like clearing time infrastructure, transaction times for things like real-time payments. You need to process the transaction in a particular time period, otherwise the transaction times out. And so there are a number of cascading regulations, rules, policies, soft requirements that kind of impact the way you deliver these products. Now, as these regulations evolve, you need to layer these up, the regulations, and the need to meet them in your infrastructure. Compliance teams will typically view them in black and white. So compliance to these rules, regulations is a non-negotiable item. So therefore, the use cases that you are required to meet have to be, you have to make sure that your infrastructure evolves and you're able to meet these requirements as these things change. And so having a nimble infrastructure, technology-based infrastructure, using the tools that are now available to help you meet those regulatory requirements are ways you have to evolve to ensure that you're on top of your game.
Can you explain how banks are modifying their transaction banking systems to meet evolving regulatory demands?
In terms of what kind of technology solutions are banks adopting today to help meet their regulatory obligations. So the first one is very fundamental, and it's what we call compliance monitoring technology. And what it does is, actually, if you look at it, regulations are changing fast and quick. And regulations are so different in each different market, especially for global or regional banks. It becomes a nightmare to just keeping track. So there are technologies and systems which are provided, which actually help keep track of the evolving regulations and also monitor for you as a bank which are those technologies that you are now adhering to or not adhering to. So that's the monitoring part of it. Second is there is a significant obligation in terms of regulatory reporting. And that is extremely time consuming. It's quite heavy and intense. And non-compliance can result in penalties and various other kinds of headaches which banks don't want and can't afford to lose time or money on. So regulatory reporting is also being automated now using AI and ML. And what that does is it ensures not only the timeliness but also the accuracy of the reporting, which takes away a huge burden from the bank. So this is just on the compliance and the reporting part of it. The areas where RegTech, as it's called, or regulatory technology, is mostly being used in transaction banking is in fraud monitoring. But fraud monitoring is a massive activity, which is an obligation that banks have towards their customers. And what it essentially does is there are algorithms which will look at transaction patterns, and looking at those transaction patterns and be able to predict a potential threat or a potential fraud, basis which some alert will be generated, and that alert is also automatically generated, and then there is actually an agent who would call up the client, try and take action, whatever is the appropriate action to be taken at that point of time. Very closely connected to that is about what we call compliance monitoring of regulations like sanctions and anti-money laundering. And these are areas where banks have failed quite a bit across banks. And I've seen even the banks with the best of systems, they have failed because it's so difficult and so challenging. And sanctions lists change every day. Entities change every day. They're updated by various, regulatory bodies. It could be the UN, it could be the US, etc. Again, AI systems which help a lot in that effort in terms of screening, in terms of filtering, in updating those lists, automating some of the, if there is a hit, then automating some of the investigation processes. So it has significantly cut down what is perhaps, in my opinion, one of the most challenging elements of the payment process, which is sanction screening and anti-money laundering screening. So that's being done today using AI and ML. Smart contracts, again, it's automating a lot of the way contracts are managed, maintained. Some of the terms and conditions actually go into the code now. So that's the level of automation that is being achieved. Two other areas where AI is being used from, not AI, RegTech is being used is one is disaster recovery. And again, regulators have put a huge emphasis on how banks can prevent or protect themselves or respond if there were a disaster scenario which would hit them with, or they were hit with. Uh, so again, cloud-based solutions are offering now, cloud-based providers are offering disaster recovery solutions also, apart from, of course, offering hosting the data, etc., on the cloud, which in itself gives a huge degree of what do I say, redundancy to the data and the applications, but also security, apart from uh, reducing the cost of infrastructure, etc., etc. So that's the other area where I would say disaster recovery, where RegTech solutions are playing a big role. So quite a few areas which are being addressed by technology, if that answers your question.
Absolutely, Vivek.